Well, Tesla is far ahead in self-driving cars, but every single car someday will have to have autonomous capability. It's safer, it's more convenient, it's more fun to drive, and in order to do that, it is now very well known, very well understood that learning from video directly is the most effective way to train these models. We used to train based on images that are labeled. We would say this is a car, this is a car, this is a sign, this is a road, and we would label them manually. It's incredible. And now we just put video right into the car and let the car figure it out by itself. And this technology is very similar to the technology of large language models, but it requires just an enormous training facility. And the reason for that is because there's videos, the data rate of video, the amount of data of video is so high. Well, the same approach that's used for learning physics, the physical world, from videos that is used for self-driving cars is essentially the same AI technology used for. Grounding large language models to understand the world of physics. Yes, you read that title right. If you're interested in how these developments could affect the market and what this means for investors, you've come to the right place. Don't forget to like. Nvidia is all in on Tesla self-driving technology, and this endorsement has sent ripples through Silicon Valley and beyond. But that's not all we're covering. We'll also look at how Tesla and Chinese manufacturers like CL are making bold moves on the global stage, and how new US tariffs on Chinese EVs and batteries might reshape the future of the electric vehicle industry. Additionally, to stay up to date on the most recent developments in the Tesla and EV markets, subscribe to Tesla Stock News. Let's begin with a recent announcement. Tesla's new AI model uses learning techniques similar to human observation, which is a significant departure from traditional AI learning processes that frequently involve extensive direct input and labeling, like teaching a toddler what each object is. Nvidia CEO Jensen Huang has highly praised Tesla's advancements in self-driving technology. There is more to this tale than just self-driving cars, though, since Tesla's method enables the AI to learn on its own by examining patterns and behaviors from massive amounts of video footage that mimic real-world experiences. Wang also explored the wider uses of generative AI, which go well beyond the automotive sector. This kind of AI does more than just process data. It also produces new concepts, designs, and solutions in a variety of domains. For example, the company Recursion is using generative AI to find new pharmaceuticals. Additionally, this technology has the capacity to learn not only human languages, but also the languages of chemistry, physics, and even art. What Huang refers to as the real world's machine translation. Imagine a time where artificial intelligence AI not only drives cars, but also creates life-saving medications, foresees natural disasters before they happen, and creates artwork that can compete with the great masters. Huang believes we are on the cusp of this new reality with Nvidia at the forefront thanks to its powerful GPUs and cutting-edge software. This innovation isn't just about keeping pace with current technologies, but driving the next wave of AI evolution. This advancement in AI learning, referred to as multimodal learning, integrates video, text, sensor data, and more, creating a richer, more comprehensive learning environment. However, the computational demand for such integration is immense, akin to juggling multiple complex tasks simultaneously, yet it is Nvidia with its robust technological infrastructure that is poised to handle these challenges. So as we look to the future, it's clear that while Tesla leads today in autonomous driving, the path they're paving with AI is one that all car companies will eventually follow to remain competitive. It's not just about the convenience and safety of self-driving cars, but about embracing an AI driven world where technology enhances every aspect of our lives, making them safer, easier, and perhaps even a bit more enjoyable. So what's the takeaway from all of this? AI is exploding, and generative AI, the kind that the technological landscape is rapidly evolving with as a driving force in AI development. Nvidia is firmly positioned at the center of this transformation. Their innovations are essential for anyone interested in following the path our world is taking, whether they are investors, tech enthusiasts, or just inquisitive people. Their emphasis on training AI using video data is paving the way for a new era where AI can simultaneously produce innovative solutions, tackle difficult problems, and even produce unexpected results. Tesla is a major force in the electric vehicle industry, and Chinese producers are expanding globally at a rapid pace. Chinese-made battery giant CATL is actively seeking international expansion and intends to build more factories overseas. This growth beyond its current 6 is essential as the domestic market grows more competitive. Partnerships like the ones with Ford to construct a battery plant in Michigan and possible joint ventures with Tesla for a facility in Nevada mirror CATL's efforts. These partnerships highlight a significant strategic shift towards globalization, driven by CATL's technology licensing agreements with roughly 10 OEMs. This innovative model goes beyond just providing technology. It also offers full support for plant construction and operations. Its goal is to accelerate global proficiency in battery production, allowing partners to improve their operational capabilities in addition to implementing cutting-edge technology. This strategy is intended to enable CATL's partners to swiftly scale up and meet the growing global demand for advanced battery solutions, ensuring that they remain competitive in a market that is changing quickly. However, the Tesla journey doesn't end there. Every day is an exciting discovery with UPS and downs, which makes it even more interesting. This is how Tesla continues to attract more and more investors into its rabbit hole. But do you know who else shares this optimism? Today's sponsor, Seeking Alpha, is interested in Tesla's impressive growth. It's not just about watching from the sidelines for Tesla bulls and those with a keen eye for finding the next stock market gem. Your one-stop destination for the most recent information on Tesla is Seeking Alpha. Targets for the price of Tesla, shares Tesla's inventiveness, and everything Elon Musk avoids the lamestream media's anti-Tesla rhetoric. The greatest online source for pro-Tesla news is Seeking Alpha. As the global battery market grows and changes, it is clear that CATL is the industry leader. In 2023, the company installed an amazing 259 watt-hours of batteries, claiming a significant 36.8% of the market share. By clicking on the affiliate links in the description and making a purchase, our channel may receive a commission. Thank you for your support. This noteworthy accomplishment highlights CATL's technological superiority and strategic growth in a highly competitive sector. But the landscape is about to change with the implementation of new U.S. tariffs aimed at Chinese batteries and electric vehicles, as well as other essential imports like lithium-ion batteries and steel aluminum semiconductors. Beginning on August 1st, these tariffs, which will affect goods valued at about $18 billion, will have a variety of effects. To start, they are intended to shield American industries from what is perceived as unfair competition from foreign manufacturers, especially those in China. By enforcing these tariffs, the U.S. government hopes to promote domestic production, which could result in the creation of jobs and economic growth in the nation, but this move could also raise prices for consumers and businesses that depend on these imported goods to show the possible impact on your personal finances. Consider an investment scenario involving the electric vehicle and battery sector. Suppose you decide to invest $1,000 in a portfolio that includes shares of companies involved in these industries. If the tariffs lead to increased production costs for EVs and batteries, companies like Tesla might face higher expenses as they source parts or materials. These increased costs could then be passed on to consumers in the form of higher prices for electric vehicles and battery-related products. In response, consumers might delay purchasing new EVs or opt for cheaper alternatives, potentially leading to decreased sales and consequently a dip in the stock market value of these companies if your investment portfolio includes stocks of companies heavily reliant on imported goods affected by the tariffs. You could see a decrease in the value of your investment. For example, if the stock prices of these companies drop by 10% due to strained profit margins and reduced sales, your $11,000 investment could decrease to $900. Moreover, if the tariffs result in a prolonged trade dispute, the uncertainty could further dampen investor confidence, leading to broader market volatility. This scenario could exacerbate the losses, making it crucial for investors to consider the geopolitical risks associated with investing in industries sensitive to international trade policies. Knowing these dynamics makes it easier to decide where to put your investment money, particularly in a market that is globally interconnected and where international regulations can have a significant impact. It also emphasizes how crucial diversity is, both regionally and across industries, in order to reduce the risks connected to any one market or regulatory framework as events develop. Effectively managing investments in the face of new tariffs and their ripple effects across global markets will require remaining knowledgeable and flexible. Notwithstanding the difficulties these tariffs present, CATL's licensing programs in the U.S. seek to comply with the tariffs' goals of protecting domestic jobs, while Tesla plans to produce LFP batteries independently. Industry insights indicate that these tariffs could increase grid-scale battery storage costs by 6% by 2026, but the competitive pricing and cutting-edge technology of Chinese batteries continue to be strong points in the global market. Finding a delicate balance between protecting jobs and guaranteeing consumer-friendly pricing is crucial for promoting sustainable growth and cooperation in the battery sector. Ensuring that, as we see these trends in the interaction of tariffs, global expansion does not jeopardize affordability or the sector's viability. The future of the battery and electric vehicle industries will undoubtedly be shaped by technological advancements and global. As we have discussed today, the intersection of technology, policy, and market dynamics is changing the landscape of these industries. From Tesla's strategic advancements in autonomous driving and Nvidia's innovative approach to AI learning to CATL's aggressive global expansion and the effects of new U.S. tariffs, these developments are crucial to understanding the direction of the market. While Tesla and CATL are navigating both partnerships and challenges in a globally competitive environment, Nvidia is leading the way in AI technologies that are revolutionizing industries beyond the automotive sector. The new tariffs on Chinese imports, including batteries and EVs, introduce potential cost increases and market shifts that could impact consumer behavior and investment strategy. What does this mean for the future of the electric vehicle industry? How will these tariffs affect your investment in EV and battery companies? Could now be the right time to adjust your portfolio? Please share your thoughts in the comments section below. And if you found this analysis useful, don't forget to like and subscribe to Tesla Stock News for more insights and updates on how technological advancements and policy changes are influencing the markets. We appreciate your time and hope to see you in our upcoming videos.